Ever placed a trade and thought, where should I take profit? Or where should I enter without getting wrecked? Or even what indicator should I use to maximize my gains or to get those sniper entries? Well, that is where Fibonacci retracement tool comes in. It's not some magic trick, it's a proven tool used by smart traders and institutions to predict market pullbacks and sniper entries. I'm going to tell you this, and I'm going to be honest, I have never seen such an accurate indicator after backtesting it numerous times through all of those years of trading. I've used tons of useless buy and sell indicators back in the days when I just started, RSI, MACD, and all of that pretentious crap on TradingView. But this one stands out. This indicator is a must-have for all traders. And guess what? Most traders use it completely wrong, and that is why they keep getting stopped out probably. So you have to customize a little bit. So take a pause. Those are my levels that I kept on my Fibonacci retracement tool settings. So make a pause. Yep, that is pretty much it. Close it, and your Fibonacci retracement tool probably looks like this, alright? When you're dragging from the lows to the highs, it doesn't matter, but my Fibonacci retracement tool looks like this, only a golden zone and the premium zone. Those are the most juiciest zones, those are the juiciest levels that I'm keeping my eyes on, and waiting for a retracement at those levels. So I'm gonna explain you just in a minute, just bear with me, because in this video, I'm breaking down exactly how I use it. I don't care how other traders are using it, I'm just showing you how I use Fibonacci retracement tool, so you can spot high probability trades, setups, and to catch perfect entries, because I showed you numerous times, goddammit, numerous times on my Telegram trading channel how it works. So if you know, you already know. So stick around, because by the end of this video, you'll be using Fibonacci tool like a pro, while others keep guessing. So let's get into it. But before I start, all I'm gonna say, whoever invented this, you're a magician, my friend. You're a magician. Thank you for making our trading journey easier. And long story short, I had to write it down here. So the Fibonacci retracement tool is based on the Fibonacci sequence, a mathematical pattern discovered by that Italian guy, Leonardo Fibonacci, in the 13th century. And he was using, I don't know, he discovered that these levels are, he was using these levels are in the, I don't know, in the nature, in the galaxy. I don't know how even he discovered this. Of course, I'm not here to teach you history lessons, but this is absolutely magical what he invented. So if the story is true and the internet is not lying to me, so he invented those numbers, and he didn't even know, he didn't even knew that we traders in the future are gonna use, we greedy bastards are gonna start using this Fibonacci tool for our benefit to start making money in the market, which is absolutely crazy. That guy invented those numbers, I don't know, to calculate some kind of patterns in the nature, flowers, mountains, trees, human body parts, whatever. And we traders using right now at this very moment Fibonacci tool to make money in the financial market. So yeah, so let's just talk about this illustration first. We're gonna jump on the gold charts for our time frame, because gold has the smoothest charts at this very moment. So for me to give you a real life example, gonna be way more easier for you to understand everything pretty clearly. And right now, your job, remember this, get this into your brain, your job to use this Fibonacci tool by actually identifying swing highs, those are the highs and those are the lows, tops and bottoms, bottom, top. Your job is to identify accurately those tops and bottoms. So swing lows, swing highs. So on the left side, we see an example when we are in the uptrend. So your job is to identify swing lows and swing highs to drag Fibonacci tool from our swing low to a swing high. And when we are in the downtrend, your job is to identify swing highs and swing lows. At what levels we can see that juicy retest and get rejected all over again. Where we can take this opportunity, this window, to open our short sell position to make money when the market is in a downtrend. On the left side, on the other hand, we're waiting for a retracement at those levels to open our buy long position. This is our window to open the buy long position from the golden zone. And yes, I'm a golden zones chaser, hunter. I'm always looking only on those golden zones. But of course, if the charts and all of those candles are perfectly I don't know, connects with some kind of, let's just say, supply and demand levels, I'm also keeping my eyes on that juicy premium zone. What's the difference between golden zone and the premium zone? So yes, some of the traders are trading only when we see retracement at the premium zone, at the top, at the bottom. Those red lines represents a premium zone. But me personally, I'm always using a golden zone, because for me, in my experience, golden zone, the retracement at the golden zone happens more often than on the premium zone. And the premium zone, why is it called a premium zone? Because there is no place for us to go even lower unless we're changing the whole character and switching from the, let's just say, from the bullish market structure into the bearish one. So that's why we are calling this premium zone, and it has like the best risk to reward ratio trade. But it is a little bit more boring, to wait for that retracement at the, let's just say, resistance, supply, support, demand at that premium zone. So I'm always hunting when the price is seeing that retracement, or let's just say a pullback at the golden zone. And I'm going to show you on the live charts how it looks like. So once again, your job is to identify swing lows, swing highs when we are in the uptrend. And when we are in the downtrend, your freaking job is to identify swing highs and swing lows. So let's jump right now on the gold charts, and let's just take a look on live charts. So I'm going to use a data that we have on the gold charts for our time frame. And these are the most perfect examples I can show you in the most, I don't know, easiest way and the most logical way that is possible. So let's just imagine that we're printing, let's just say lower low, we printed a higher low, and price rallies to the upside. And at some point, we are getting rejected. So for example, at this, on the fourth or third candle, we can identify that yes, this is our swing low and this is our swing high, and this is where we get that sharp retracement, sharp movement to the downside. So your job is, if you want to get that juicy accurate price level where you should enter a buy long position, from our swing lows to our swing highs, you're dragging this Fibonacci tool, you're drawing this Fibonacci tool, and look, the golden zone was respected. Rally to the upside. Let's just say a retracement, even on a lower time frame, on the 1 hour time frame, a rally to the upside. Let's just use, I didn't even prepare this to you, but let's just drag this from the bottom to the top. Golden zone was respected. Once again, it is magic. This is magic, my friends. And the guy who invented this, it is a magician. So yes, once again, we reach our top. We broke the whole structure. When we see here, those wicks that represents the bottom, and right now we broke through that, let's just say, from those floors, and we shifting from the, let's just say, from the bullish market structure into the bearish market structure. We see a bounce at around here, not technically at around here, because the market is a little bit choppy, but our bottom is at those levels. Let's just say gold price is 2.3k, and we were at around 449 $. So yes, a massive drawdown from the, let's just say, from the top to the bottom. We are dragging this tool, let's just say Fibonacci tool. Golden zone was respected after bouncing back up, retested that juicy level. And in general, what are those levels are showing us? They're showing us this candle that we have insane amount of supply. The selling pressure at this golden zone is so strong that there is a very high probability for us to get rejected once again. So it is magic, friends. It is magic. Yes, let me just delete that. For example, I see with my naked eye very clearly, I didn't prepare this to you, but let's just imagine that I believe that we're going to reach at around here our premium zone, if I'm not mistaken. So from the swing highs to our swing lows, because we are in the downtrend, look perfectly. We retested this premium zone. So sometimes, yes, I'm hunting for the premium zone and for the golden zone. For the golden zone more often, but the premium zone, if it perfectly aligns with my strategy, because I see that we have tons of supply here. So the market structure come first in my eyes. And then look, perfectly connected with that premium zone. So stop loss, entry point, drawdown, taking this window as an opportunity to make money. Because if we are wrong, yes, there will be times when you're wrong. It is absolutely normal, and we're gonna break through this, let's just say, ceilings. We're gonna break it. So in general, there is a very high probability right now from this premium zone to start shifting the whole trend from being, like, let's just say, a bearish into the bullish. And look, I just accidentally draw this descending trend line. So if we're gonna break through that, because we have the multiple, let's just say, touch points, top, top, and this top, if we're gonna break through that premium zone, we're gonna break through this descending trend lines. And you already know the trend line trading strategy for me works, and I like trading based on those trend lines, or let's just say from my spider webs that you already know from my Telegram trading channel. But what are you talking about, Plan FOMO? We retested the golden zone first, then premium zone. So stick with your golden zone trading strategy and stop misleading us about your premium zone if you're focusing only on the golden zone. Yes, my friends. Yes, we retested the golden zone twice. Boom, boom. 2 short sell positions in a row. 2 windows for you to make money. But look at the data that we have at the top, at those 2 big bearish candles. And Fibonacci, Leonardo Fibonacci is telling you that there is still a high chance if we're going to start shifting from a bearish into a bullish market structure, there's a lot of supply. The supply pressure in here is very strong and we can get rejected once again. Those Fibonacci levels are telling you that there is a very high chance for us to get rejected from here once again. So look, short sell position from here, short sell position from here, so short sell position from here, from the golden zone twice and 1 at the premium zone. So the data is right here on a bigger time frame. We didn't broke through those highs, so we're still in general in the downtrend, looking on the bigger picture. So keep an eye. It is worth to keep your eyes on that premium zone and the golden zone, on both of them. I'm gonna delete that. Look, price starting to shift. We from the bearish into the bullish, we printed a higher low, we broke through this low, and the price is, from this high, and the price is shifting from the bearish into the bullish. Boom, impulsive movement to the upside. Let's just say you don't know where the top is, but let me just delete that. So the price is shifting from the bearish into the bullish. We broke through this previous high. We start broken through this previous high. Market structure, everything looks bullish. Start switching from the bearish into the bullish. And if I'm dragging those Fibonacci's, let's just say, and I can identify after this consolidation, so this is our previous swing low, and this is our previous swing high. Let's just say, here it is. Look, drawdown, nasty, nasty drawdown, and we bounce back up from this golden zone. Golden zone works like magic. Oh my lord. And when I'm backtesting, I'm always looking, oh my god, how many trading opportunities I could take and make so much money. Yes, Fibonacci's is amazing. Shout out to you, Leonardo Fibonacci. Shout out to you, my friend. Thank you. And yes, rally to the upside. All right, let's just keep backtesting without even, I didn't even prepare this for you, some few examples. I just prepare you those clean drawdowns, or those clean pumps where we can truly identify swing lows and swing highs, or swing highs and swing lows. So as an example, we can identify, all right, let's just keep continuing. I don't want to waste your time because, yeah. So let's just imagine. We topped out from here, drawdown, supply. We retested the supply and demand, my friend, supply and demand. If you're catching and trading based on those supply and demand strategy, drawdown. We started to bounce back up. Oh, all right. We started to bounce back up. Another drawdown. So this sharp movement, this, let's just say point A, I'm going to draw it once again. 1, 2, 3, point A, point B, point C, point D, and this is how we can identify that this is from our swing highs to our swing lows. Golden zone was respected once again. And yes, not insane drawdown, but in general, it is still our window. That was our window to make money from short sell position. So once again, let me just delete that and let's just keep going. Let's just keep backtesting. All right. Let's just keep back this. Oh, sorry for that. Delete that. All right, I can't see clearly right now those swing highs, swing lows. The market was choppy. Look at those massive volatile wicks because we saw some kind of, I don't know, some kind of probably ongoing news. Yes, so in general, once again, when we start identifying, after getting this sharp movement to the downside, once again, we shifted from the bearish market structure into the bullish one. Yeah, we're rising back up. We broke through those highs. Yeah, the market sentiments, everything is bullish. The market structure, in general, is bullish. So this is our lows and this is our highs. All right, looks juicy like point A and point B. Looks juicy because I don't see those sharp movements. I see the top at around here. And if you're wrong, always you can redraw if when you're getting more and more data inside your charts. So look, from our swing lows to our swing highs, bounce back up from the golden zone. Amazing, amazing. Even let me just take a look without any preparation. So for example, this is our swing lows and swing highs. All right, golden zone was respected. God damn it, perfect, perfect. All right, I see that on here because we have a lot of demand. We have a lot of demand here, so I believe that the premium zone will be respected at around here. So after retesting, after identifying this with this wick swing low and swing high, yes, premium zone was respected. So we have to understand both charts, supply and demand, and by using Fibonacci tool as an extra confirmation. So yes, let's just say a demand gap, this all impulsive candle, and once again, supply and demand, my friends, supply and demand. Look, after getting this sharp movement, sharp retracement to the downside, boom, bouncing back up. At some point, we found our support. I don't know why, who cares? Rally to the upside. And I don't see any sharp pullbacks. I don't see none of those. Despite the fact that this is our demand, after this consolidation, pop, impulsive movement to the upside. But from our swing lows to our swing highs, without getting those sharp retracement, all I can see the retracement is around here. So from our swing lows to our swing highs, at some point, we respected the golden zone. And look, what is the logic behind this golden zone? Look at those two impulsive movements. These two impulsive candles, those bullish candles. That what identify our potential demand. Or of course, if you're using Forex terms, that fair value gap. So in general, Fibonacci tools just helps you for a double confirmation, to double check if your supply and demand, or let's just say fair value gaps, are correct or not based on the mathematical, this whole algorithm formula. Imagine that this Fibonacci tool, there's I don't know, from goddamn it guys, from the 13th century, there's an algorithm inside this Fibonacci tool that helps you to, I don't know, navigate yourself in the market. So how cool is that? From the 13th century, can you imagine this thing works still from the 13th century, invented by, I don't know, Leonardo Fibonacci. Once again, shout out to you, my friend. And yes, so yeah, rally to the upside, whatever. Well, what else can we see? All right, we are in the uptrend. There will be moments that, yes, I'm identifying, for example, this swing low and this swing high, not that sharp movement to the downside. Let's just see if we have the respect. No, we don't. So sometimes, yes, it will be moments when the price won't reach your juicy golden zone. So for those who are trading only based on the Fibonacci levels, so yeah, you don't take the trade. So you protect your money, you protect your capital. Capital preservation comes first. Yes, rally to the upside, still waiting for those juicy, and nice smooth swing lows and swing highs. Just keep backtesting. All right. For example, oh, here, perfect. Let's just see if we retested this whole supply gap. All right, from the swing low highs to our swing lows, we're shifting the whole trend. Golden zone was respected. How many times I need to show you this? Boom, supply. We are in the downtrend on even the smaller time frame. Of course, in general, we're still in the uptrend on the bigger time frame, but yeah, I'm still seeing on the lower time frame that we're shifting. We're trying to shift potential head and shoulders patterns, whatever, from this swing high to this swing low, golden zone, together with the premium zone. Of course, like the market is a little bit more volatile because yeah, I'm taking this small chunk. So the golden zone was respected once again. Nasty drawdown. I don't see any sharp, let's just say, retracements. So from our swing high to our swing low, golden zone was respected. Blah, another drawdown. How wonderful, fellas. Again, let's just take this whole chunk that I prepared for you because yeah, swing highs, swing lows. Look how the price was rallying up to the upside. Rally to the upside with no sharp retracements. But yeah, there's a catch. Is this our swing low or this is our swing low? Well, let's just double check both of them. So if I'm identified that this is my swing low, not this one, because there's no sharp retracements, all the way to the upside, only to the upside. The price climbing towards the upside like with the ladders. All right, swing highs, swing lows. At some point, yes, we retested the golden zone. But yeah, if I'm going to take this, for example, together with that wick or without, whatever. So if I identify that this is my just an example, swing low, and this is my swing high, the premium zone was respected. So the golden zone, premium zone, like those are perfectly identified. If I'm going to use at this one as a premium zone, look how it perfectly connects with this impulsive pump, with this fair value gap, or let's just say demand zone. It depends on what terms you're using this at the current moment. The golden zone represents that strong demand and that gap that we can get filled and bounce back up. So backtested, fellas, backtested by ourselves. Backtested. All right, the market is super choppy. Is like consolidates. Are we are in the uptrend or in the downtrend? It doesn't matter. All right, I'm seeing with my naked eye that this is like potential our last swing low, and this is our swing high, even on the lower time frame. Of course, this is not like a sharp retracement, but still, let's just double check it. What else do we have to lose? Time? Yeah, we didn't even retest. We didn't even retest that. All right, swing lows, swing highs. At some point, we retested the golden zone. So you're trying to drag and pinpoint those Fibonacci's when we're going to the upside or to the downside, dragging, identifying supply, demand, until you're going to catch it. Until it clicks and you're going to catch that perfect zone and you're going to enter that buy long position or sell short position. Trust me, guys, not every single, there will be days when there are no trading opportunities. So it is like normal. It is normal. Fibonacci tool is the best, in my opinion. It is the best. All right. From the swing high lows, from the last ones to our swing highs, we're shifting the whole trend from the bearish. You see the previous high, boom, broke, change of character, climbing towards the upside. We retested the golden zone at some point. We retested and rallied to the upside. So I'm going to keep this going from the swing. Let's just say lows, or even to identify this low, rally to the upside, golden zone was respected. And the golden zone perfectly connects every single time. If you want to double check, let's just double check at what levels the golden zone is like connects. All right, so it connects perfect with this demand. You see, we have a supply at first, now we have a demand. So retracement, still higher lows, an uptrend, and rally to the upside. All right, let me just quickly delete that. All right, delete that. Let's just continue this. All right, let me just take Fibonacci tool and let's just pinpoint on something that I didn't prepare. All right, swing lows, swing lows, swing lows, swing high, swing lows. All right, so for example, this on a lower time frame, boom, golden zone was respected. Of course, as always, to backtest and to see all of those only juicy opportunities where you could make money is easier than to identify what is going on the live charts. But still, the data is right there. And if you're able to identify perfectly swing highs and swing lows, look, swing high, swing low, swing high, swing low, swing high, swing low. So this is what comes you. Your job is to practice and to grind your eye to see it clearly with your naked eye. There's like potential demand zone at that level. Look, perfect. This is our swing low, rally to the upside, no retracement. Only I see the top here. And after price is pulling, in general, we are in the uptrend. We're trading with the trend on a 4-hour time frame, gold charts. Look, from the lows to a highs, retested the golden zone, rally to the upside. All right, let's just pinpoint from this point to this point. Didn't retest it. The price is rallying up to the upside. We cannot catch it. Lows, highs, retested at some point, golden zone, and we get that sniping juicy entry. Oh my god, I'm gonna put this, I don't know, in the middle. I didn't realize that I'm pinpoint this at the right corner of the top right corner. So yeah, once again, let's just say swing low, swing high, this massive wig, the golden zone was respected. Swing low, swing high. At some point, yeah, the market is volatile. Come on, guys. Gold is experiencing and like exploring new all-time high territories. So yeah, almost $3,000 on gold we have. All right now the market experiencing this nasty supply, so we'll see what we have in the future. So I'm going to announce on my gold trade on my Telegram channel what I'm planning to do next. So if you're not in my Telegram trading channel, there's a link down below. Go join it. It's absolutely free. And I believe that we're shifting the whole trend. I mean, from the bullish into the bearish, we didn't broke those through those highs, so we'll see what's up in the near future. But yeah, in general, let me just get back to that illustration. In general, that is pretty much it. This is everything that you need to know about the Fibonacci's, about how to spot and hunt for those retracement at those juicy levels where you can buy, to open your buy long position or a sell short position. So yes, that is pretty much it. Once again, your job is to identify swing lows and swing highs very accurately. So this is your job. Indicators come second. So always you have to understand the price action, the whole market structure in general, what is going on, and how to double confirm that yeah, Fibonacci golden zone perfectly aligns with my demand because we have those impulsive movements to the upside, those candles, those bullish candles, or on the other hand, or supply, we have that nasty drop, and the Fibonacci tool is like perfectly aligns with my supply zone. So yeah, that is pretty much it. Some of the traders are trading based on the premium zone. The red one represents a premium zone. I like to chase for the golden zone, and so I'm gonna leave you to decide what is your favorite strategy. Comment down below if you're using Fibonacci tool or not. Golden zone, premium zone, what is your favorite? Because in my opinion, in my experience, the golden zone, the retracement to that golden zone happens more often, and to wait for that premium zone could be boring. So yes, but of course you have to be patient in the trading. But yeah, sometimes I'm just having this golden zone in everything, golden zone in patience, golden zone in patterns, everything. So I'm chasing for that golden sweet spot. Where should I open my buy long position, if you know what I'm talking about? So yeah, that is pretty much it. I hope you guys are enjoying this video, and yeah, peace out. I'm gonna see you next one.